What is up, everybody? Thank you so much for stopping by on this beautiful Monday night. Tonight we're going to be talking about IMBI. But before we do, make sure to hit that subscribe button, hit the like button so that we can get this information to as many people out there who want to learn about the trade. With that said, let's begin. Okay, we're going to be talking about the things that we need to watch out for on IMBI in particular. So we have a range of resistance between 93 and $1.03. We are trading right now at what is that? At 50 cents. We also have a gap right above this resistance range, and that gap is between 147 and 158. It's really interesting the way they worked this price action is that they got everybody super bearish. We touched the support of this broadening descending wedge one time, two time, three time, four time, but on the third time they burst it up to the top, testing this resistance range, getting everybody super bullish, opening positions right here, thinking that we're going to go way up higher again, and it capitulated. The broadening descending wedge already has a pretty good amount of tests. So let's see, we have this would be 1, 2, 3, and we are accumulating right now so that we can potentially make the fourth. Let's make sure that we're on track here with all the notes. Okay, so I want to talk about some psychological resistances here. I want you to notice that every single golden pocket ratio, I'm talking about from the inverse 0 spot 618, the not 618, we have the 1 spot 618, the 2 spot 618, and the 3 618. All of these 618 ratios are confluent with something here. So let's look at the first one. The not 618, if we draw a trend line that comes right up to that leads right up to here, I'm thinking that, we're on the daily chart right here. I'm thinking that we can break out possibly on the second day. This is looking like we may be able to have a little bit more of bearish action to test the bottom of this one more time before we come back up. I'm thinking maybe a red session followed by half a red session before we start making some moves up on the second session or on the beginning of the third. So the not 618 has confluence with our resistance level of the descending broadening wedge. Now the 1 spot 618 has a direct confluence as well with the range 93 cent bottom here. Now the 2 spot 618 has also confluence with our formation price objective. Now the price objective is $1.23, and why is because usually descending broadening wedges tend to realize at the very beginning of their trend, or the start of the formation, excuse me. So, and now the 3618 just happens to land right in between our gap area here between 147 and 158. So we can use these, because they're so, I don't want to say sought after. It's just that we tend to go there as humans. We tend to see the 618 ratios and we all together just agree on that area and we want to go towards it. So they can also work as strong resistances and strong supports. So I just want to make sure that you guys are clear with just how much rhyming there is within the golden pockets. All right, so let's see. Let's go ahead and move on with the notes. Okay, so if I don't think that this is going to be the case just yet, but if we're able to call this candle the bottom, or if this is the reversal candle that we're going to use to continue up to the upside, it would make some sense, because this is a hammer candle that's coming down from a downtrend. Usually hammer candles, and especially when they're on a daily or a higher time frame, they signal us a potential reversal of trend. Now, I am noticing here that there is the volume is just decreasing so drastically here. I understand that we did have a bit more of sell pressure with this one, but it's just such a huge candle with really nothing in volume. I mean, look at this one here. This has massive volume. I mean, in comparison, you would think that this would be at least here, but no. This kind of makes me feel like we may be looking at a little bit of a further downside. Now, we're going to validate that stuff with indicators and whatever else, but I'm just giving you what I see based on raw price action. Okay, let's see. I'm going to bring up some simple moving averages here so that we can take a look at some confluent targets as well. Now, the simple moving average, the 10-day simple, the 50 simple, and the 100 simple are all confluent with the 0, 1, and 2 spot 618 Fibonacci retracements. So here is the 0, the not 618 with the SMA 10. Here is the SMA 50 with the 1 spot 618. And here is the 100-day moving average, which can be pressured just a little bit up with upside pressure right here to land right at our 2 spot 618. Just there's an enormous amount of rhyming in this chart with all the moving averages, with the raw price action, the resistances that we're talking about. This is all just it's a lot. So I just want you guys to know just the obstacles that we're facing here. Let's move on with the notes. I want to be able to get bias and direction. So let's move on to the RSI. Okay. Immediate short term. The 30-minute RSI is giving us a flat line. You know how I feel about that flat line, the flat line signals, man. I don't like to trade them because they give us no bias and direction. Let's look at a smaller time frame and see if that gives us something. 15 is also pretty much flat line. I really don't like using 5, 3, and 1 minutes, but to their credit, they're also within the flat line area. So now, however, the bi-hourly is signaling us a downside pivot, and it is entering the bear strength percentile. This is a relative strength index indicator. We have the indicator split in 2 sections. The bottom half is the bearish control zone. The upper half is the bullish control zone. Now, in those 2 zones, they're also split in 2. This area down here would be the bull weakness percentile, and this area right here would be bear strength. And similarly, our bear weakness percentile and our bear strength. The indicator works just the same as any other RSI indicator, where we have the overbought levels and the oversold levels down here. So just in case you hear me say those references, I'm just giving it to you like that. Okay, so we're trading below the moving average right here, so that's pretty bearish, and also entering bear strength. So this the bi-hourly is suggesting downside, and that's already in the short term. Let's look at the hourly chart and see. The hourly chart is in bear strength. The thing is that it's not giving us a bias and direction because of its flat line. If anything, it has a slight pivot to the downside, which should indicate some sideways action at first, possibly before some further downside mid-session and on. Let's go to a larger time frame. Let's see the 6 hour. The 6 hour is suggesting downside, and the RSI signal line has already entered bear strength percentile. We're trading above the moving average, so this is not looking too good for mid-session and on, including tomorrow. Now, a larger time frame, this is going to be the 12-hour, and the 12-hour is on a nosedive and has recently crossed below the moving average within the bear percentile, the bear strength percentile, excuse me. So tomorrow is likely to finish in the red. So I would prepare for possible entry at some lower levels to average down if you guys are in a position right now that is at a loss. One thing that is bullish within this is in the 12-hour RSI. We do have, yeah, we do. So let's see if we can just make this. We can't. I could possibly do it here. Hold on. Let's make this a large chart and bring up the 12-hour. And there is a bullish divergence happening on the 12-hour, which is a good thing. That means that this is likely to resolve within the next trading session or two. Also, within the fact that the broadening descending wedge has let's see, 1, 2, 3. Yeah, within 3 touches of already the resistance, our fourth is surely to break out, come back and test the newly converted support before takeoff. And in that process, we're likely to see either a break through these psychological resistances straight to the desired or the price objective of 123 and coming back in here to confirm support within this range or above it. This is all speculation. It's not actually what's going to happen, but I'm letting you guys know that there is the possibility of that since we are in a pretty large trend reversal formation here. Let's move on. Okay, so I'm just looking at the notes, guys. Just a sec. Let's go to our last chart right here. Okay, so if we were to take the indicator suggestions, we can use a Fibonacci retracement inversely. So the way I did that was like taking the fib from the bottom up. So the bottom of our trading range to the top of just our trading range here. And that's how you get these levels right here. I just wanted to be able to show you guys so that you can see how I drew this. This gives us downside targets. So if I were to take consideration from our indicators suggesting downside, I could possibly see touch to the 1.272 at 38 cents before a bounce. And I don't think that would be a gradual decline. I think that decline could be fast acting before it just recovers immediately. So now if we look at that 38-cent level, which is right down here, it kind of lines up with this bottom wick right here. And if you just take the trend line and match it to the support of the broadening wedge, we can see that we can possibly even land here tomorrow. Before seeing, like, this could be what Wyckoff theory calls a terminal shakeout or a spring. We can actually touch right down here and immediately recover towards the upside and potentially finding some resistance. I would assume that the SMA 10 would then come back down to the 56 level here, 56 cent level. We find some resistance right here before trying to also touch this for breakout. So tomorrow I would see this as bearish, but I am actually, for the next few days, I am a bit bullish on IMBI. So I don't have any specific targets for trading this, but what I can say is that entry, not financial advice, guys. I do have to say this all the time. I forgot to say it yesterday too, but I'm not a financial advisor. Please don't take what I say as a form of of advice for buying assets or selling any type of assets. Use this as entertainment. So we could get a quick recovery here, enter at around the 38 level. I'm sorry, we can enter at the 38 level. Between 38 and 43 would be our entry range, 38 cents and 43. And we can ride this. If you guys wanted to take profit right away, I would say the NOT 618 at 63 cents, and then we would start confirming our newly converted resistance into support, and then from here we would start making our ascension. So I usually don't like to hold overnight positions of small caps like this or micro caps because they present a lot of danger. But this could also technically be a swing trade, to where you just hold for about 3-4 days, and we could eventually potentially touch the top of the 123 price objective here. Anyway, you guys, that's going to do it for IMBI. If you have any questions, make sure to reach out to me at ARCa Bulls on Twitter. I also have a Discord. I'll leave all the links at the bottom so that you guys can be able to join me. And yeah, that's about it. Thank you guys, and have a good night. I'll catch you at the bell. Adios.